Another stock analysis and review video. My name is Jermaine. I'm the founder for L.E.A.R.N Invest. And what we do in these videos is that we go through companies listed on the Jamaica Stock Exchange and we give you a full overview of the company. So today what we're going to be doing is reviewing the Sagicor Select funds. So it's actually this episode is going to be unique because it's going to be two companies in one. But because they're both managed by Sagicor, I thought, and they're both the same type of company, essentially, I thought it would make sense to merge them together since they can be considered similar, right? So we're going to go through a full process, look at the history of the fund, how it has performed, look at the financials as we normally do, take a bit of look at the price history, and I'm going to use JMMB Moneyline for that review of the price history. And then we're going to talk about what is potentially upcoming for the fund, just some of the things that you may need to know as an investor. So this video, I must say, is sponsored by JMMB Moneyline. They're the sponsor for all our stock reviews currently. So, feel free to check them out. The link is in the description of this video for you to learn more about them. So let us just jump right in.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N Grow Invest.
All right, awesome. So let us open in prayer. Lord, we thank you so much for this day. We thank you that we're able to see it. Father, we thank you for knowledge, wisdom, and understanding, and the ability to produce wealth. Bless us now in Jesus' name. Amen. All right, so guys, I'm going to ask you to do the usual. Please share this video. I know a lot of persons would have participated in the IPO for Sagicor Select funds. So I know I know many persons are interested in seeing this review. So share the video, share it to your social media profiles, share it to your WhatsApp stories. It doesn't matter, just share it for me. And let us just jump right in. All right. Let's start here again. I'm just reminding everyone that this stock review is sponsored by JMMB Moneyline. So let me just jump. Where's my mouse? My mouse has disappeared. Sorry about that. There we go. All right. So the information that we're going to go through here is for discussion, education, entertainment, and illustrative purposes only, and should not be construed as professional financial advice, solicitation, or recommendation to buy or sell Sagicor Select funds or any other securities mentioned. All right, so the format for the stock review, we're going to talk about, again, this one is a little bit unique because we're going to be reviewing two companies in one, but it's a simple company to understand. So I think we can still do it within the hour that we normally do these reviews in. So I'm going to be going through them side by side. So it's SELECTF and SELECTMD. Those are your tickers. And I see L.E.A.R.N saying that she lost money on that IPO. So I'm going to talk about that, right? So, and maybe talk about a little bit how you should view this fund, what your expectations should be when you own a stock like this. All right, but we'll get to that after the information has been shared. So let's start with the overview. So Sagicor Select Funds Limited is a publicly traded company which has the primary purpose of trading in securities listed on recognized exchange. The company comprises of 5 classes of shares. So 2 of those classes of shares, you'll have you'll have the Financial Select Fund, that's SELECTF, and the Manufacturing and Distribution Select Fund, or SELECTMD. Those represent the Class B and C shares, and both shares classes are listed equity funds. So that's what you're to consider these companies, listed equity fund. I will talk about that, what it means a little bit, but essentially it means you're getting a pool of stocks in one. So if you think of it as the Financial Select Fund having all of the stocks that comprise the JSE Financial Index, and SELECTMD having all the stocks that comprise the JSE Manufacturing and Distribution Index, that's a good way to think about it, because that's what it is. So the objective of the fund is to provide exposure to price and yield performance of the stated index. The SELECTF and MD are expected to track the JSE Financial Index and the JSE Manufacturing and Distribution Index. The holdings in each fund is dependent on the proportion of each stock in the indices. And we'll see very shortly how it is weighted, right? Because it's not equal portions of each company. What they're trying to do as best as possible is mirror the respective indexes. And so that's how it's modeled, right? And I'll talk about what that could mean as well. So what you're seeing seems a little bit small, but to the top left, what you're seeing is the 5 classes that were mentioned. The 2 we're going to be talking about here today are what you're seeing right around this area. That's the Financial Select Fund and the Manufacturing and Distribution Select Fund. That's what you're seeing here. On the right of that, what you're seeing is just some highlights about the company. So they are both Class B and Class C shares. I mentioned that before. There are 23 stocks. Well, at the point, this screenshot was taken at the end of 2019. That's the year they're both listed. So this number is likely updated now, because as each companies are added to the respective indexes, the index, the fund is updated to match the index, right? Sagicor SelectF was able to raise 6.3 billion for the IPO, and Manufacturing and Distribution was able to raise 2.5. So they both together raised 8.8. 20,000 applicants for SelectF, 5,000 applicants for SelectMD, and that to me kind of shows you the interest in both, right? You probably have more holders currently of the SelectF than you do SelectMD. I mean, of course, this is at 2019. It might have changed. And one was listed in August and the other in November. So they're both listed in the same year. And interestingly enough, when we talk about what was happening at that time, when we think about it, that was right before the pandemic. So one of the things that really affected this company is COVID-19. If you think about it, at the time, the financial index was doing really well, right? Around this same year, NCB was, I think this was the same year, 2019, that NCB went up to $235. The whole financial index was doing well. And so, SelectF seemingly was taking advantage of that at the time. Of course, through the lifetime of such a fund, there are going to be, recession-like conditions, because it's kind of up in the air whether or not you want to consider the last 2 years a recession or not. But there was some sort of suppression for the economy, and so that would have affected the performance of the financial sector. So if you think about all the financial stocks you've held, at least, well, some of them, and we'll go through the list soon. If those aren't doing well, then SelectF is not going to do well. On the manufacturing side, if those companies aren't doing well overall, or the index is not doing well, then this fund is not going to perform as well. And we'll see that when we get to the financials, that they would have seen some losses over the last 2 years. And one side, the manufacturing side, has actually seen some growth, but there's still ways to go back to what they were projecting in 2019. Okay. So this was just kind of breaking down here the shares. Let me go back to it. This way is a little bit better. So Class A shares would be wholly owned by Sagicor Investments Jamaica Limited. The Class B shares, which represent those offered to the general public at the time of the IPO, that would have been purchased by Financial Select Fund. And Class C shares would have been offered, and those would have been purchased by the M&D Select Fund. So just kind of giving you that breakdown, right? So let's start with SelectF. Hopefully you're able to see this. If not, I can maybe try and zoom in. But what you're seeing there, it's 2 slides, right? So 1, 2. So let me start with the first one. There are some things that I want you to focus on here. So think about all of these companies that you're seeing as a part of the JSE Financial Index. What we have now is a portfolio weighting this would be the Select F weighting. This will be the JSE Financial Index weighting. And then it would show the price change as at that point. I believe this was for the Q1 report, March 2022. So this would have been as recent as last quarter, right? Or 2 quarters ago rather, right? So what they try to do with these funds is match as close as possible to the weighting of the index. Now it's not going to be an exact number because depending on the shares that are available to purchase, because they're buying it just like we have to buy, right? So if you're not able to get exactly the amount of shares to get this at 20.18%, then they may have something close to it, maybe 1 or 2% higher or lower, right? So we see where with Scotia Group, they have 11.49%, but the index, it's actually 10%. So the thing to understand about this and the risk here for a fund like this, if you look now to this column on the right, where it says Q1 price change, in the NCB down 14%, JMMB would have been up 12%. But if you think about it now, let's try to find one that would have grown, right? Let me go to the next page and see here. We have here SSL, SSL VC that would have grown 76%. But you're not able to see it. All right, let me try to do it. What's the best way to do it here? One sec. Let me just share it from the. I'm just gonna go directly from the report and share it there, and just let me know when you're able to see it. All right, that's the page. Is that better for you, L.E.A.R.N? Can you see it better? Let me know if you're able to see it okay now. Okay, so what I was saying, so if we look at SSL VC, year to date, it would be up 76%, but the weighting of it is 0.09%, right? And that's the thing about this fund that you need to understand. You're going to see greater appreciation in terms of value of the fund when those that are weighted higher move, right? So even if this anything I would say below like 1%, if it goes, 100, 200, 300%, you're not going to get a lot of gain in terms of that because of how the fund is constructed. Think about it like your portfolio. If you have 0.09% of your portfolio in a company and it goes up 500%, you're likely not going to see a lot of value in terms of your portfolio return because you have such a small allocation of it, right? So because this is working from the entire index, the price will move significantly when those that are weighted highest move, right? Of course, again, when this fund would have been constructed, the entire financial index was doing well. So at the time, it would have. That's kind of the idea that I believe they had here when these companies were doing well, they would have been projected to continue to do well, and then so the fund would have been expected to move at a certain growth rate over the first couple of years. I remember at the time they were sharing some potential projections. Of course, we know when 2020 came, it was a different story, right? So this is it at the time. So you want to look at it. So here's the thing that you need to weigh with this kind of fund. If you purchase this fund, then you are essentially taking ownership in all of these companies, right? So it's very important to understand whether or not that is something that you would want to do. So if you look at all of these companies in the financial index and you say, well, I only like 1 or 2 of these companies, then a better alternative would be to own those companies directly. Now, if you're interested in owning the financial sector, all of the companies that comprise that, you're for example investing long term, because this is it's concentrated in one sector but diversified in terms of the number of companies within the fund, right? So that's something that I wanted to leave you with there. let's look at the SELECTMD now, because we said we'd look at them one by one. And this, what I'm looking at, is a Q1 report. That was the latest report that was released. So we're just using that to get an understanding of the companies within each fund, right? That's what we're doing now. So on the manufacturing side, we have companies like Grace Kennedy, that's GK, that's 19% of SELECTMD. And we have Carib Cement, that's 11%. We have Wisinco, 14%. Carreras is 10%. Seprod is 8%. So let's go down the list again. So we have a company like Fosrich that has done really well this year. So at March, it was just up 80%. We know that it's up much further by now. A company like Tropical would have grown over 100%. But the rest of it, you know, a few of them in negative here. CAC is down, you know, Creamy is down, Berger is down, Salada is down, Indus Pharma is down, and Seprod would have been down at this point, right? But we actually see where the manufacturing index has actually been trending upwards. We'll get to that number soon, but the manufacturing side of the index has actually been performing better over the last year and a half than the financial index. And of course, you can attribute a lot of the companies that you're seeing here to it, like, you know, Fontana. CPJ is a part of this as well. So CPJ would have had 400% growth last year. So that would have helped the index and helped the overall value of the fund. So things like that. So again, same thing that you need to consider here. If you look at this list of companies and you say, well, I'm only confident in a handful of these companies, then you'd want to look at them individually, versus if what you're going for is owning the entire manufacturing index, then these are all the companies that are here. Now the question that we get, or a person may ask here, is, you know, what happens when a new company is added, right? So at some point throughout the year, this portfolio is rebalanced. I haven't seen an announcement as to how often. When I listened in on one of the AGMs, what they said was that they tried to be, you know, strategic about the rebalancing. So let's say we know that Dollar Financial would have been released recently. We know Spurtree would have been released. So at this point, Spurtree is not on the manufacturing list, but at some point it will be added. Dollar Financial is a part of the financial index. At some point that will be added. So once they confirm with the JSE that the company is a part of the index, then they make plans to purchase. And so it becomes a part of the index, and now they have to do this rebalancing exercise to ensure that they're able to map close to the index as much as possible. All right, hopefully that makes sense. If not, just let me know in the comments, right? So let's move on. So that would be the same thing that I would have showed you just now. So let's look at the financials. I'll talk about things like the net asset value. We're going to look at their financials in Excel and so on. All right, so what we have here to the top right, let me just go back to the file just in case you're not able to see it. Should be one of these screens here. Yes, here we go. So what you're seeing, the green line is the JSE manufacturing index. What you're seeing in the black line is SELECTMD. And what you're seeing is, because they tried to map the weighting, it's going to move very closely in terms of performance with the JSE index. And again, that's the idea behind it. So as the JSE manufacturing index performs well, and as you've seen here, from, you know, last year till now, it has been growing, right? So at this point, it's probably highest it's been in the last 2 years. So on the manufacturing side, there has been some growth. Let's look at the financial side here. The financial side, however, we know that it has not been the case. So it's actually below 0%. So it's actually in negative, right? As at March 2022, that's what you're looking at here, all right? So that would be the performance of both. The financial side, as we know, is going to be driven heavily by the companies that make up the majority of the index. So when those companies start to perform better, then this will improve, and then the fund's performance will improve as well. Okay. So that's that in terms of the top performers. Let's look at that. I have that graph there. So in terms of top performance on the financial side, at that point, it was SSLVC that was the top performer, then PJX, then LASF, then JMMBGL, then Proven. And again, think about it. What are the weightings for the top performers? SSLVC we saw was 0.09%. So even though it was up 76.6%, that would not have a great impact on the fund because of the weighting. All right, JMMB, I believe, was at maybe 8 or 9%, but that only grew 12.5% to this point. And we know JMMB is hovering right now about $43. So it's not going to have a major impact. And so most of these that would have grown, these are single digit growth. You're not going to see a lot of movement in terms of the overall index with this kind of growth, right? Let's go over to the manufacturing side. Top performers on the manufacturing. So it's interesting. I never thought that FESCO would have been over here, but we're seeing FESCO here. We know that FESCO has had a good year. Tropical, Phosrich, AMG as well. Fontana has seen some growth as well. SOS, I believe, hit circuit breaker just today. So at least the top 5 companies here are doing well. Question now becomes, what are the weightings, right? So the way that you want to track this fund, if you're a shareholder, you're looking at the performance of the individual companies, and then you're seeing what the weightings are in the fund and see whether or not it's going to move the needle, right? So all we need to do is look at the fund and see, well, okay, how is it in relation to, I'm actually not seeing FESCO in the list here. So it probably means that at this point, at March 31st, FESCO maybe was not a part of the fund. It's kind of hard to think though, because it's been listed for over a year. So I'm not sure why that is, because if it's listed under manufacturing and not a part of it, maybe they haven't taken a chance to purchase any shares as yet, but it means that probably at some point they will. Okay. And in terms of the highlights, let's get back to that. So they have for SelectF, they had a net loss as at March 31st of 131 million. Now, how this works, there are a few ways that you make money from this, or they receive income, right? So when these companies pay dividend, they have committed to paying, I believe, up to 90% of that amount back to shareholders. And when there's appreciation of the price of the companies, then the value increases for them in terms of fair value. That's now counted as profit or income, right? So with everything that has been in terms of performance of the index, they've registered a net loss of 131 million, right? And as I said, if you look at the fact that the index is now in negative, that's not hard to imagine. Dividend income to at this point would have been 14.7 million. So from all of the companies that are part of the fund, the dividends they have received, that's 14.7. Now we know companies like NCB are yet to pay a dividend from the start of the pandemic. And so of course, if the companies that are heavier in terms of weight don't pay dividend, then this amount is going to be low. In terms of total assets, it would be 3.9 billion at the end of March. And the NAV, the net asset value, I'm going to talk about that in a second, is 0.76 as at July 18. Now, these funds, when we talk about stocks and we think about what's considered a fair price, you could use the NAV in this case for this type of security. So when we look at the price that is trading at soon compared to NAV, you can in some ways consider it to be trading at a discount to this net asset value that's right here. And it's essentially the assets minus the liabilities, and in this case divided by the number of shares outstanding. Okay, let's look at it for SelectMD. So they have actually registered a profit for SelectMD of 256 million. As we said, the the manufacturing index has been doing well. Dividend income of 27 million, that would have been an improvement over what SelectF would have done. Assets are 4.3 billion, and the NAV here is $1.13 pretty much. So because of the overall performance of the manufacturing index, again, it's above zero here, then the SelectMD is actually profitable, the NAV is higher, and the dividend income would have been higher. So we're going to talk about the dividend that they have paid shortly. So we will talk about that when we get there. So let's look at the price history for a little bit. So this is SelectF that you're looking at right now. So these are the highlights, and I'm going to go to the JMMB Moneyline in a sec to look at it a little bit more. So it would have listed a little over 2 years ago, right before 2020. Would have seen a lot of volume here. Well, I'm not going to look at this chart right here. Let's just focus on the numbers that are below here. So week to date, it's down 4.7%. Month to date down. Year to date down 8.5%. In the last year, in the last 52 weeks, it's traded as high as 60 cents, but it closed yesterday at 46 cents. All right, that's the SelectF. Again, this one, they would have registered a $131 million loss. So in terms of volume, within the last year, 14,000 to 65.3 million in terms of volume, number of units traded. The shares outstanding is 5.1 billion, so it's a lot of shares that are outstanding. Will we look at the top 10? If we have time, we'll look at the top 10 to see how much is actually available to the public, and then the market cap, which is of course the share price multiplied by the shares outstanding, gives us the market cap, which is 2.3 billion. All right, and we saw the volume traded yesterday as 1.3 million. That's actually not bad, but we'll get to Moneyline to look at them both in a second. All right. This is SelectMD. So for year to date is actually down 22%, and we see the price ranging, though it's less of a difference in terms of trading. The word is evading me now, but point spread, it's a smaller spread in terms of price. So 57 cents to 60 cents. So it's traded pretty much within that range for the last year. It would have ended at 58 cents yesterday. Volume, not as much volume as SelectF. So 2.6 million is the maximum volume that has traded. Shares outstanding is 3.8 billion, and the market cap is 2.2 billion, right? So we're gonna go to Moneyline now to look at look at a little bit more detail in terms of that part. So I'm gonna stop sharing for a sec. I don't want you to see my password. So let me just log in here quickly. Let me know if you have any questions in the chat, and I'll get to them as soon as I can. Okay. All right, so we're gonna search for SelectF first. All right, so hopefully you're seeing my screen. I'm gonna try and zoom in again for you. Okay, hopefully that is good. So we see today traded similarly to what it did yesterday, except the volume is not the same, 270,000 units traded. This is the queue currently. So we're gonna look on the buy side. So these are persons making an offer to purchase. We're seeing the largest volume here, 878,000 at 45 cents. That's not bad. The rest of it on average is probably less than 100,000 units. And on the sell side, we have 2 million units available here for 48 cents, 1.8 million units. Because of the price of this, I mean, it's not a lot of money in terms of value traded for these numbers. But of course, it can add up over time, right? So 73 orders to sell, 22 orders to buy. So in terms of demand, we're not seeing a lot of demands in terms of buy orders there. In terms of trades, let's look at the last trade. So then this is one of the things I like about Moneyline. You get the detail in terms of the volume traded at what price and the time of day, right? I think this is very important for me. So when I'm trying to track, like when the circuit breaker went off, I can tell the exact time by just checking JMMB Moneyline, all right? So we're seeing here the volume that would have traded today at what price and what time. So that's what we're seeing here. Let's look at the volumes. I like to look at maybe the last 3 months to 6 months, see how it has been, trending. So the volume has been, pretty much. So we saw on July 13th, that was a week ago today, 7.6 million traded. Now we don't know what that purchase was for, because when I checked the news, I didn't see anything to say, whether it was a trading in shares or a connected party or anything like that, or any specific purchase being done. Apart from that, we didn't see that type of volume until all the way back in February. The rest of the time, it's going to be below 5 million or less. On average, it's going to be a lot lower, right? So that's what we're seeing here. Let's look at the last month. So the price would have been, at 48 cents, and it's pretty much around the same point today. So in the last month, it hasn't moved much in terms of price. The last 3 months, just a few cents again. 1 year, it was up higher, but based on a performance, you can imagine that it would have been trending down, right? That's that one. Let us look at SelectMD now. Again, I'm just gonna stop sharing for a second and I'll bring it up again. Here we go. So this is SelectMD. Volume is 120,000 units, and the price has been kind of holding within that same 3 cent range, as I said before. On the buy side, 16 orders, not seeing a lot of demand currently there. In terms of selling, we're seeing 44 orders to sell as high as $3, right? So those persons are holding out, trying to recover and get to a certain, sell price there. Let's look at the last 6 months. So volume, we're not seeing the same amount of volume as we saw with SelectF. In June, we saw 2.3 million units traded. And what we're seeing, if you look at the price, at the start of the year would have been 74 cents. So it's actually down maybe about 20% or so. Year to date, we saw 22%, right? So it's down year to date. Even though actually their Q1 was actually pretty good. We saw that they made a profit. So their Q1 was good. And what we saw in terms of the NAV, it's $1.13. So this is trading at this is trading at more than 50% discount to its net asset value. So this would be considered, use the word undervalued here. All right. Last trades in terms of what we saw today. This is it here. So not much volume really, 120,000 units in total. Price within a 3 cent spread. So that's what we're seeing here. So not much activity currently. All right. So let me go back to the presentation. Okay. So they would have announced a dividend. So I have them both on the same slide here. So we have a dividend for SelectMD that was paid last year. They announced it twice, one paid in July, another paid in December. So the total dividend for the year was 0.0182 cents, right? So that's, we look at the total dividend amount soon. For SelectF, they would have announced 2 dividends as well, totaling 0.017 cents, okay? All right, so let's go to, stop sharing there again and bring up the Excel. I'm gonna look at that for a little bit here. Okay, so what we're seeing here are the financials. Again, we're looking at 2 companies, so bear with me. This is SelectF. Because we're only looking at 3 years, I thought it would make sense to not list it in thousands or millions and just put the full value there. There's not really a lot of data to look at here. So interest income, we saw where that has been down from 2019. So 1.29 million here as opposed to 1.5 million. Dividend income we saw would have gone down again for the financial index. Not a company like, for example, NCB would not have paid a dividend since 2020. So we're not seeing the same type of dividends that we were, seeing a few years ago, right? So dividend income is down. Gain on sale for financial assets at fair value. So this, as I said, is one of the way that they realize income. For last year, they were able to save 40 million realized there. In terms of other net changes, so this again would be now when you look at the overall value, that would have been a loss of 230 million for last year. So that means pretty much total income would have been a negative here, 107 million for 2021. And these are all of their expenses. Now, a thing to note with a fund like this, you're going to have management fees. We're seeing that here. So for the last 2 years, that's 27 million in management fees. You're going to have things to look at like transaction costs, that rebalancing that they need to do. It's going to come at a cost. That's what we're seeing here. There's a cost to the auditors. I'm really just focusing on the major expenses there. You'd have seen irrecoverable GCT being one of them as well. So the two main things to watch here in terms of expenses, management fees and transaction costs. This would have accounted for about 20 million last year alone. So net income for SelectF was negative 148 million, right? And EPS would have been negative. So on the first year was positive, third year negative, okay? Let's look at assets. So of course, all the stocks that they have within their portfolio would be what is equal to its overall assets. They have no inventory, none of the things that a typical company would have. So it's a lot easier to understand and go through, right? So financial assets at fair value, that value has gone down. This looks like about 30% in the last 3 years. Receivables have gone up, so it's 6.4 million here. Taxation recoverable has been pretty much the same figure, and cash and cash equivalents, cash is almost down by about 55% here, right? So overall, assets are down about 35% in the last 3 years for SelectF. In terms of retained earnings, we're seeing that figure go from a positive 914 million to negative 903 million. So because you're not able to make a profit in the last 2 years, you've not been able to retain any earnings, right? And then payables, we have here about 26 million in total. And cash flow, I mean, this is gonna be pretty straightforward. Dividend income or any expense that is there, it's very, very simple and easy to go through. So I'm just gonna focus on their beginning and ending cash position here. Well, I'll call attention to here when they would have issued the shares initially. At times they do mention that they have to take loans to be able to make purchases for the securities. So if they may take a loan, they may have to repay that at some point. But you see related party loan received, related party loan repaid, which means it was able to take place within the same year. Interest paid, that would be an outflow of cash. And so that's what we're seeing. So overall cash position for the last 3 years, again, would have been down. We saw that from the balance sheet. So that's SelectF. And the net asset value, the last thing that I wanted to look at here, is down about 20% in the last 3 years. So now we're going to look at SelectMD. So same thing we're going to go through. Interest income here would have been trending up. So this would have been growing about 600% here in terms of interest income. Dividend income has grown as well from 13 million to 92 million. So that's good to see. Gain on fair value, that's a positive 9 million as opposed to negative 8 million last year. And other net changes, 791 million positive net change, which means we're 894 million in terms of income for them. Expenses, similar case here. Management fees to look out for. Transaction costs, I figure this would have been maybe from this transaction cost would have been either from the IPO, if I'm not mistaken, or maybe them doing their transactions to put all the securities in the fund. That would have gone down significantly because I don't think they've made a lot of changes maybe in the last 2 years. Maybe 3 or 4 companies would have been added to the index over that time. So it's a similar thing you're looking for, right? The major expense is going to be on the management side or on the transaction cost side. It actually went down for 2021, but the management fees from where it was in 2019 have gone up. They did mention something in their AGM about, renegotiating this cost, trying to ensure that it's at a manageable point. So that's something to look for, but understand that this is going to be a cost that's there based on the type of fund that it is. Okay, so we're seeing positive net income for SelectMD to the tune of 866 million, right? So that's excellent for them. Their EPS has grown 100% over the last 3 years. So the MD side of things is performing well. All right, so in terms of financial assets value, more or less say maybe up about 10% in the last 3 years. Receivables, 3 million, that's manageable. Cash and cash equivalents down significantly here. Of course, they're going to be paying out cash in dividend. They have committed to paying up to 90%, so they're not going to keep a lot of cash really. If they get cash in, and they'll either be repaying loans that they would have gotten into to make purchases, paying out dividends, paying out their expenses, etc. So you're not going to see a lot of cash being kept. I guess it just depends on the time of year. So at the end of the year for 2021, they had 57 million in cash. Retained earnings, we're seeing where they do have retained earnings here, 280 million. They would have had a loss in 2020 of 517, but they were able to now turn that around. And payables, those numbers are, I believe they're able to clear those if needed with the cash that they have. All right, and then for cash flows, same thing here. They would have gotten issued their units here. And in terms of overall cash, that's what we're looking at. We saw that figure from the balance sheet. It's really very simple to understand here. Dividends being paid out would be a part of the cash flows from financing activities. That's an outflow. When they receive dividend from the securities that they're holding, that's going to be an inflow of cash. And anything that they need to adjust in terms of how they need to produce their cash flow statement would be done here. Okay. So hopefully that gives you some insight as to what's happening. So one of the things that I wanted to do from here now, when I checked the news section for them, there's nothing to report really. There's nothing that's upcoming. I actually just bring you there 1 second. So we're looking at the JSE's website. So we have to find it, you just need to search for SelectF or MD. So we're on MD now. If you go to the news section here, I'm just going to open this in a new tab. They'll typically publish the NAV every few days. So the net asset value for SelectF is here. So if you click on this link, it should show you the NAV for both. So the NAV for SelectMD is 1.127, and for SelectF it is. So this is how you're able to track the overall value. Now this can be one of the things you're gonna use to determine what price, for example, or what would be considered a fair price for it to trade. Because I remember when they were speaking about the IPO, they would have calculated the net asset value at the time. I think the IPO was $1, if I'm not mistaken, and fair value at the time would have deemed to be, I think, $1.30 or something like that. I'm gonna double check that, but that's what I remember at the time. So if you want to keep track of that value, just go to this section. It's published every few days. There are a lot of pages coming back. Let me see if I can go all the way back to when. IPO, no, it doesn't go back so far. So it goes back to 2020. All right. So let me go back here. So there's nothing that I've seen in terms of news that's coming up, but what I do expect to see, as I was saying before, are the updates to the indexes. So SPUR3 being added, Dollar Financial being added to SelectF. Those are things that you'll be seeing at some point. In terms of how you should view this type of company, as I said, it's not going to trade or move in the same way as a typical company would. You have to look at how the overall index is performing, look at the net asset value, and understand that in our market, because look at a company like QWI, you're not likely going to see a company trading at its net asset value, right? It's usually going to be at a discount. Now they'll tell you that since it's at a discount, it's considered a reasonable price to purchase. That's something you have to determine with your financial advisor. I would say that to see, in my personal opinion, to see growth for this, you're going to have to be maybe in an environment where the overall index is doing better. Maybe things have started to perform better for JC in general, like you're getting an abundance of income. Well, SelectF would definitely need to turn a profit at that point. SelectMD is already doing that, so that would be in my opinion an opportunity if you're interested in that type of security. But understand that what comes with it is diversification, in that you're not buying one company, you're really buying the entire index. So it brings us to the conversation about, diversification versus concentration, because you're at the mercy of the entire makeup of the index. If you have a company that does really well, it comes down to the weighting of that company for the index and whether or not you're going to see that being translated into the fund. So I hope that makes sense. Hopefully those who are shareholders of the company understand it a little better. It is likely to continue to trade at a discount to the net asset value. How much of a discount is really dependent on the investors who are purchasing it. And it's just something that you have to understand what comes with owning it. It's considered in many ways more of a long-term investment, at least based on the current state of the economy. That's one of the things you want to look at. So hopefully this helps those who have been waiting to maybe understand and learn a little bit more about the company. So let me know if you have any questions now. I'll kind of close out my presentation here. Okay, not seeing any questions. So I'm just going to scroll through the comments a little bit. So good night, everyone. Good night, good night. Yeah, so dividends, as I said, would have been paid last year. They have not announced any to this point of the year as yet, to my knowledge. Think about the long term, it should pick up. Well, I mean, what is long term for you, right? It definitely, based on how it is constructed, based on how they make money, based on how they realize profit and income, it does seem best suited for long term. The question you need to ask again, do you want to own multiple companies, or do you want to own the entire index, or do you want to own the individual companies within the index? Hopefully the internet challenges for you, Craig, would have been a lot better. Thank you for that, L.E.A.R.N. I mean, we do try to do videos like this as often as possible. We are doing stock reviews twice per month now, thanks to JMMB, our sponsor. So, we're able to do this a lot more consistently now and get you this kind of information. Let me know which companies you'd like to see us review in the comments, not the chat, but the comments under the video. All right. Okay, cool. So I believe I've answered all questions. Yeah, so let me know if this was helpful for you. Let me know if you have any questions afterwards. If you're watching this on a replay, just type the questions in the comments and we'll get to it. Again, I just have to highlight our sponsor for today is JMMB Moneyline. The links to access and check out Moneyline will be in the description of the video. And so thank you so much for watching. I really do hope to see you in the next one. At this point, I believe, let me see if I can verify which company we're going to review next. Do you remember, Renee? I think it's QWI. I'm not sure, but I'll confirm. The next one is scheduled to be in 2 weeks. So it's going to be August 3rd. So we'll just stay tuned, turn on notifications for our channel, and you'll see when it is coming up. All right, I see a comment here from L.E.A.R.N, but with the pending recession outlook on both, it's not so good. Well, it depends, right? Because we have kind of been in recession-like conditions, especially, but what we saw last year, and we saw that in the results, that the manufacturing side of things have actually been doing well. So it would really be considered, at least from SELECTMD's perspective, that it's trading at a significant discount, over 50%, to what would be considered the fair value for it. So, I mean, I think sometimes maybe investors treat both as the same, right? So that may be something that maybe they don't fully understand. Both, because SELECTMD is performing well, SELECTF not so much. How does their management fee compare? So I'd have to look at MJE's or QWI. So I think QWI is the next review. I thought about a video of comparing all of the funds, so QWI, MJE, etc. I thought about a video like that. Let me know if you'd be interested in that. But I mean, their fee dimension is calculated as a percentage. I assume it's the same for QWI and MJE as well. It seems standard, right? For there to be a set management fee, because that's how these are typically done, right? Okay. All right, everyone. Thanks again for watching. I think I've gotten all of your questions. I hope to see you in the next video.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N Grow Invest.